All right, well, stocks rallying to record highs after the Federal Reserve maintained its outlook for 3 rate cuts this year. The S&P opening above 5,200, pushing even closer and closer to that 5,300 level. You've got the Dow up nearly 200 points here at the open. Keith Lerner of Truist, co-chief investment officer, joining us now. Keith, it's great to see you here. So I guess first, just your reaction here, this March that we continue to see 2 record highs, this March to the upside, anything going to stop the market's momentum anytime soon?
Yeah, well, great to be back with you, Shauna and Brad. I wish I was in studio with you all, but this is a good second. Listen, I think what we're seeing is we're in a bull market. Bull market rules apply, and what tends to happen in a bull market is the surprises tend to be the upside. I mean, of course, there's going to be something at some point that we're going to have a gut check. I mean, we've only had like 1 or 2 days of that. If you go back the last 30 or 40 years, it's very unusual not to have at least, at some point a 5% correction. But I think more importantly, as an investor, you want to stick with the primary trend. That primary trend is positive, and it's being supported by fundamentals as well. The forward earning estimates for the S&P just made another record high, and that's been happening almost every week as well. So I think the bottom line is that the primary trend is positive. If you do have pullbacks, which we will have, use those as an opportunity, but it's not a place, even if we get a little bit extended on a short-term basis, that we would be selling into.
Keith, there are probably a lot of investors out there that might be wondering where a safe place to invest in the market is when the market is already at record highs. Do they just go and pile into the crowded trade, or are there other areas that are catching your eye right now?
Yeah, well, the first thing I will just say is that new highs make investors nervous. But new highs are not a bad thing. When we look back historically, when you make new highs, the forward returns are actually positive. And the other thing we have to kind of keep in context here is the market didn't do anything for 2 years, right? It went down in 2022, up in 2023, but over that period, you were flat. Our work suggests after you're flat for 2 years and you break out, the probability of positive returns is well above average. Now, going back to your specific point on areas, I mean, we still like tech, we still like communications, we like financials, which are at a new high, but still well below where they were several years ago. So there are pockets of opportunity. The equal-weighted S&P also just broke out to a new high, but didn't do anything for a few years. Also, we're neutral small caps, but I will say that is a cheap area of the market that you could also see some catch up there as well. So I still think there's plenty of opportunities in the overall market right now.
Keith, are you a little bit more bullish on small caps after what we heard from Powell yesterday and what was included in the summary of economic projections, just in terms of GDP holding up even better than initially thought?
Yeah, listen, I want to be because they're really cheap. The one thing that we've noticed in our work and what we're waiting for some confirmation is, I talked about those forward earning estimates for the broad-based market moving up. We're not seeing that same trend for small caps or mid caps. They're weaker. So I'd like to see that move up. But strictly from a valuation standpoint, if the yields come down, you'd probably get a bigger rip in small caps. So I think the way I would say is we're sticking with large caps. But for those that are underweight small caps, I think to your point, if yields come down further, that would be a positive for small caps. Because they have so much floating rate debt, they're more sensitive to interest rates. So I do think there's an opportunity there.
Keith, according to some FactSet data, over the quarter and the earnings period and season, I should say, we're at the second highest level of mentions of AI on earnings calls here. What does that signal to you about where investors should be considering or thinking about what's actually going to play out after this hype phase, and many of these companies have to deliver on that through their earnings?
Well, I think when you start to see, companies that only have small exposure to AI, no exposure, and they start talking about it, you have to raise your antenna a bit, saying, hey, there's some speculative parts. People are getting really positive today because the market's at an all-time high. So you just have to be mindful. I mean, we remember back in the late 90s that we would start seeing something similar about .com. Companies would change their names to have a .com. So I think that's something to keep in mind. More broadly, though, Brad, I will say when we just look back more recently at tech's recent outperformance is a little bit over 30% over the last 3 years relative to the S&P. You go back to the peak in 2000, tech's outperformance was 250%. So again, 250% versus 30. We're not seeing a broad-based bubble, but we're certainly seeing pockets of speculation that I think investors just have to be mindful that things don't go straight up, and those more speculative areas obviously have more risk.
Keith, how are you looking at an IPO like Reddit? Not specifically the company, but what that could signal just in terms of renewed interest in certain areas of the market?
Well, I think it would be healthy. We're not as much as the market's up, I mentioned earlier, new highs, back in the 90s, people would get excited. Today, new highs, people get nervous, and probably because we went through, the technology bubble, the financial crisis, and so forth. So far, we have not seen really, the IPO market has not been, that robust. So I think having some of that excitement, some inflows into equities would be actually a positive. It's when it starts to get a little bit wacky, where we start seeing a lot of stocks come out IPO, and then you start seeing these 50, 100% jumps on a given day. We're just not seeing that yet. So as a first step, seeing Reddit, I think that would be a positive.
Keith Lerner, Truist Co-Chief Investment Officer. Keith, always a pleasure to get some of your insights. Thanks so much for the time here after the open.